Coinbase is one of the most popular and trusted crypto exchanges in the world. But it is also facing some challenges from regulators and competitors. In this section, we will explore how Coinbase's lawsuit from the SEC and its entry into the NFT market could impact its crypto exchange business and customer base. First, let's talk about the lawsuit. The SEC sued Coinbase in June 2023 for allegedly acting as an unregistered broker, exchange and clearing agency for crypto securities. The SEC claims that Coinbase has been facilitating the trading of tokens that are considered securities under U.S. law, without complying with the disclosure and reporting requirements. Coinbase denies these allegations and says it has been trying to work with the SEC to get clarity on the rules for crypto assets. The lawsuit could have serious consequences for Coinbase and its users. If the SEC wins, Coinbase could face fines, penalties, and injunctions that could limit its ability to operate in the U.S. market. It could also lose some of its customers who may be worried about the legal risks of using Coinbase, or who may prefer other platforms that offer more crypto options. On the other hand, if Coinbase wins, it could set a precedent for other crypto companies to challenge the SEC's authority and create more regulatory certainty for the industry. Second, let's talk about the NFT market. NFTs are non-fungible tokens that represent unique digital assets such as art, music, games, and collectibles. They have exploded in popularity in recent years, generating billions of dollars in sales and attracting celebrities, artists, and investors. Coinbase wants to tap into this growing market by launching its own NFT marketplace that lets users mint, collect, and trade NFTs on its platform. The NFT marketplace could be a huge opportunity for Coinbase to diversify its revenue streams and attract new customers. By offering a user-friendly and secure way to create and buy NFTs, Coinbase could appeal to both crypto enthusiasts and mainstream audiences who are interested in digital art and culture. It could also leverage its existing user base and brand recognition to compete with other NFT platforms such as OpenSea, Rarible, and SuperRare. However, the NFT market is also highly volatile and competitive. The demand for NFTs could fluctuate depending on the trends, tastes, and preferences of consumers. The supply of NFTs could also increase as more creators enter the space and more platforms emerge. Moreover, the NFT market is not immune to regulatory scrutiny and legal disputes over intellectual property rights, authenticity, and ownership. In conclusion, Coinbase is facing both challenges and opportunities as it navigates the evolving crypto landscape. Its lawsuit from the SEC and its entry into the NFT market could have significant implications for its crypto exchange business and customer base. How Coinbase handles these issues will determine its future success and growth in the industry. GameStop is one of the most popular meme stocks, which are stocks that gain popularity and momentum on social media platforms like Reddit's Wall Street Bets. The company has been undergoing a transformation to become more digital and e-commerce focused, as well as expanding its product offerings beyond video games. One of the recent events that attracted attention to GameStop was its 4-for-1 stock split, which was announced on July 6, 2022 and took effect on July 22. A stock split is a corporate action that increases the number of shares outstanding by dividing each existing share into multiple shares. For example, in GameStop's case, each shareholder received 3 additional shares for every share they owned before the split. The main purpose of a stock split is to make the stock more affordable and accessible to a wider range of investors, especially retail investors who may have been deterred by a high share price. A stock split can also create a perception of growth and momentum, as well as increase the liquidity and trading volume of the stock. However, a stock split does not change the fundamental value or market capitalization of the company. It also does not guarantee that the stock price will increase after the split. In fact, GameStop's stock price declined by about 16% in the month following the split, partly due to disappointing quarterly results. GameStop reported its third quarter fiscal year 2022 results on December 7. The company's net sales were $1.2 billion, down from $1.3 billion in the same period last year. The company's net loss was $67 million, or 25 cents per share, compared to a net income of $31 million, or 12 cents per share, a year ago. The company's cash and cash equivalents fell to $804 million from $1.4 billion a year earlier. The company attributed its lower sales to supply chain challenges, global chip shortages, and lower store traffic due to the pandemic. The company also said it invested in inventory to meet customer demand and mitigate future disruptions. The company's lower profitability was mainly due to higher operating expenses related to its transformation initiatives, such as hiring new talent, opening new offices, and launching new products and services. One of the new products that GameStop launched in the third quarter was its digital asset wallet, which allows users to store, send, receive, and use cryptocurrencies and non-fungible tokens, NFTs, across decentralized apps. The wallet extension also enables transactions on GameStop's NFT marketplace, which is expected to launch in the second quarter of fiscal year. The company hopes that its foray into the blockchain gaming space will attract new customers and generate new revenue streams. GameStop's stock split and quarterly results have influenced its meme stock status and turnaround strategy in different ways. On one hand, the stock split may have boosted its popularity and visibility among retail investors who are looking for high-risk, high-reward opportunities. On the other hand, the quarterly results may have raised some doubts about the company's ability to execute its transformation and compete in a changing industry. GameStop faces many challenges and uncertainties ahead, such as increasing competition from online platforms like Amazon and Microsoft, changing consumer preferences and behaviors, regulatory risks related to cryptocurrencies and NFTs, and potential legal actions from shareholders and creditors. The company will need to prove that it can deliver consistent growth and profitability in the long term, as well as innovate and adapt to the evolving gaming market.